Stop. Don't file your taxes until you check these things in QuickBooks. A lot of times we send our reports to the tax preparer, but then we end up needing to file an amendment because we didn't check these things and we're focused on meeting the tax deadline. We just want to get it in. I used to do this earlier on before I knew that you can always file an extension, or you can just try to look at these accounts and make sure that the reports are the best condition possible before you hand them over to your tax preparer. We're going to go to the reports standard because that's probably the first place you want to look. I'm going to show you some other places that you can look as well. And we're going to go to the profit and loss. Now this screen alone will tell me if you're going to pay a significant amount of taxes, if you're going to overpay taxes, because I can see where the flow of things are going. And I could just let you know you're more prone to pay taxes because everything is not categorized where they're supposed to be. We're going to condition the report to last year because we're focusing on the tax year for 2025. And you just want to scan through, some of these accounts and just see if something jumps out at you. What we need to be looking for is we need to go through and just check and make sure that everything seems to be okay. Now we have an uncategorized expense here. So that alone would tell me that there is something that will not end up in the tax return numbers when we give these reports to our tax preparer. So you don't want to leave this like this. You want to code this to whatever the expense is. So we'll go to inside of it. It has, okay, it looks like there was a zero balance here for something, but this right here is, it looks like it's an insurance payment, and they coded it to uncategorized expense for whatever reason. I also wanted to show you because maybe it came in from the bank feed like that. So it probably came into the bank feed. What we can do is see whatever posted, and here it is. They did code it to uncategorized expense. So we can do it two ways. We can undo it here, or we could go into the transactions that we had and we can just code it from there. Well, let me show you this way. So we can undo it because it was for the uncategorized expense. We go to posted and we can undo it from here, which would put it back into pending, which means it's not into QuickBooks yet. We have to code it, and then find that transaction for $2,000 from this insurance agency, and we could go categorize it to insurance where it's supposed to be. And we can just hit post, and then it will bring it in to our QuickBooks. And here it is, categorized to the right account. So when we go back to the reports on the profit and loss, we have to always condition it to the last year because that's the year that we're focusing on. It should be now categorized to insurance expense. So the uncategorized is 0. We'll have to clean that up. But I also want to let you know that this is a test data file. So some of the dates are not where they're supposed to be. So for tutorial purposes, I had to code that transaction to December 2025. In actuality, the file has it for February of 2026. So it won't end up in the profit and loss. But the good thing is that we coded that transaction where it needed to be, which was insurance. And now it's not in this report. So let's go into the balance sheet. Before we go into the balance sheet, I just wanted to let you know that if you see anything that is in uncategorized income or uncategorized expenses, then your books are not tax ready. You need to dive into those accounts and see what exactly is in there and then reclassify them, meaning recode them to the correct account. Now this file, which is a test file, doesn't have payroll. But if you did have payroll, you would need to get the year-end reports from your third-party payroll provider, and then make sure those reports say exactly what it says in QuickBooks. It has to match dollar for dollar, cent for cent. It has to match the figures correctly, or you may need to do some adjustments. You may need to have someone like a professional go in and make those adjustments for you so that when you're ready to file those payroll taxes and that business tax, you'll be compliant with what it is that you need to file. We're going to go to the balance sheet, and the accounts that you need to look at on the balance sheet are the accounts receivable, which would tell you what amount of invoices you have out there that has not been paid yet. And that's a big deal because you can be waiting on that money to come into the business for you to do things that you need to do with those funds. And we're going to condition the report for last year because we're focusing on 2025 taxes again. And we're going to look at our accounts receivable. Now, this looks okay, 1535.80. That could mean that the invoices are current or they're old, and you need to follow up on those customers to get the money that is owed to you. If you need to deep dive into this account, we can go to a report called Accounts Receivable and Aging, and I have these 3 here highlighted because these are the accounts that we normally go into for tax preparation. We normally do the balance sheet, we normally do profit and loss. And accounts receivable aging is a big one because we want to know what kind of invoices is out there and what we need to look for collecting on. These can easily be your favorites. I have them as my 3, but if you wanted to have something else there, you would just take the star off of it. And then if you wanted to put it back, you just scroll down to where it is, click the star, and it'll put it right there. It's just something to take a minute off of having to search for the report. So let's go into accounts receivable aging, and we're going to condition it for 2025, the last year of 2025, because that's what we want to know. And this report, I mean, it looks like everything's pretty much current. It depends on your terms of your invoices. If you want to collect 20 days, 30 days, 45 days, this report would allow you to show you what is due within 30 days, within 31 to 60 days, 61 to 90 days, 91 and over, to just show you, oh, okay, I need to call these clients to find out what's going on with the payment for these invoices. We also look at the opening balance equity, which is all the way down here. 9 times out of 10, if there's a balance in this account, something needs to be categorized. Something is off. That is a big alert to tell you, okay, yeah, something is miscategorized, because normally this account is 0 at the end. It kind of has to be because this needs to be categorized. I'm going to get to that a little bit later. We can go and check let's do that. Let's check undeposited funds. Now, undeposited funds need to be 0 unless it is a true balance that's out there that you're just waiting for a deposit. So we're going off the scenario that we've gotten this money back and it's just sitting in undeposited funds. So what you would do is that we see 22675. We want to clear it because we know we got the payment from the customer. So we would just have to make the deposit. So 9 times out of 10, this payment is sitting in undeposited funds. So we would just go to create bank deposit. And you see this $226.75. That is the invoice that we need to clear the undeposited funds. So the way it is that you'll get an invoice. The customer will pay you. The payment will come through QuickBooks and normally will go to undeposited funds. After you make that deposit, QuickBooks would take it out of undeposited funds and put it where it matches up with that deposit that you make. So we're going to do that now. This is the bank deposit. This is the invoice. And we're going to click, let's say that's because I want to make sure it shows up in 2025. That's the only reason why I'm changing this deposit. Let's click save and new. And then when we go back to the balance sheet, undeposited funds should be clear. Okay, so we want to make sure that there's no lingering deposits hanging out there. There's no lingering payments. Everything that happened within our business, we want to make sure that QuickBooks accurately reflects that. We're also going off the scenario that this client has a loan. So we're looking for a loan on the balance sheet. And the loan would be here in liabilities. It wouldn't be a current liability unless it's due within the year. But anything after the year, a due date after the year would be long-term liabilities. So, and we don't see any long-term liabilities here. So what we would do, we would have to search for the loan because the client told us that he had a loan. We could search loan in the search engine up here and just look to see, hey, what stands out at us. And this journal entry, which someone created, could be an indication of a loan that's not correctly categorized. So it says opening balance for loan received from imaginary bank. All right, well, let's click on it. So right here, I can tell you that this journal entry is incorrect because when you get a loan in, the loan comes into the bank unless there's some other method or some other payment. So when you get a loan, the loan generally comes in through the bank. And when it comes in through the bank, your bank is an asset without going down the whole accounting principles. Assets have debit balances. Okay, so when a checking account, which is an asset, has money coming into it, it has a debit balance. This is showing that it has a $4,000 credit balance, which means there's money going out of the account. But that's not the case here. He got a loan in from Imaginary Bank, which would mean that the balance of $4,000 came into the account. So we would put $4,000 into the checking account. So now we have to make sure that this reflects a loan because right now it's just showing us that he got $4,000 into the bank account, but it could be categorized as income where he has to pay taxes on it. We don't want to do that. We want to make sure that this $4,000 accurately reflects what it is for. Right now it doesn't. So we have to change this adjusting journal entry to loans payable. And loans payable is a liability account that has a credit balance. Payable, which is a other current liability, QuickBooks will tell you. And we know that that balance has to be $4,000 to make sure we reflect and tell QuickBooks that that's a loan. It is dated for 12/20/25, so it should show up on our balance sheet report. And then we're just gonna click save. Okay, we'll X out of here. It's not conditioned, so let's condition it to last year. And let's look for we cleared up undeposited funds. Let's look for our loans payable, and there it is for $4,000. It is showing up as a current liability because it's saying that it's due within the year. I'm gonna have to do a little research on that, on why it's showing up as a current liability or notes payable. That's the thing. Notes payable would be a long-term liability. This $4,000 is correct, but if that loan had principal and interest tied to it for this payment, the loan balance here as of 12/31/2025 is not correct, which means we would have to go in and we can either do it from the journal entry or we can go to the chart of accounts and make our adjustment there. We'll find it in the current liabilities. Remember I said notes payable is the long term, so here it is. We will click into the register of our loan payable. And right now this is not showing any interest that the client has paid towards the loan. So we got the $4,000 in, but there was probably a payment that was made. That payment probably had principal and interest to it. So we have to reflect what happened. So we got the $4,000. We have to also say that there was a payment. We'll do another, because I don't want to confuse you guys. We'll do another journal entry to... Yes, we'll do another journal entry. And I just wanted to point out that I'm doing journal entries now because the data is not in here. If this would have flowed through the bank transaction screen, then we would just split everything there. But it didn't flow in, so now I have to create it. So I'm going to make a journal entry to capture the principal and interest. So I'm going to do a journal entry and we're going to date that for 12/31/2025 since that amount came in, I believe, December 20th, 2025. So we're going to just debit the loans payable Now we have to debit the loan, meaning we have to take it out. So let's say there was a payment of $1,000 and the interest, there was a payment of 15,000. The loan payable we're going to debit because we're decreasing the balance. So it's $1,000. There was a payment of, let's just say $1,500 was the payment. The principal is the $1,000 and the interest, let's just say it's $500, right? Now, when you're doing journal entries, the debits have to equal the credits. So now our credit would be from our bank because we made a payment on that loan. Money came out of the bank, which would make the bank have a credit balance. And it's the checking account, which would be for $1,500 because that's the total amount of the payment that the owner made. But we want to make sure that the loan reflects the principal and the interest. Sorry, this is not interest earned. This is interest. This is supposed to be just interest paid because he paid the interest on the loan. Let's just put it there. Now, if we did this correctly, we want to show a balance of the loan that he only owes $3,000 because our loan was $4,000. So let's see if that's what happened. And I forgot to put in your memo here, you can put, payment, first payment on loan, whatever he said that happened for that day. Let's close it. And good. So that's what we want. We want the original balance of the loan was $4,000. We made a payment for $1,000. That $500 does not go to the loan principal because the $1,000 is only going to the principal balance of the loan. $500, which is interest paid, which we do get to claim at tax time, we have to put that in its own expense account so that we can get the true balance for the loan payable account. I know that probably was a lot, guys, but I'm trying to show you the flow of really meticulously going in and make sure every dollar is categorized the way it's supposed to be. It makes a huge difference when you're giving these reports to your tax preparer. We also want to look at the balance sheet for any fixed loans. We went over accounts receivable, we went over opening balance equity, we went over undeposited funds and loans. The other thing too is the fixed assets. So this account, I believe, don't have any fixed asset because again, it is a test file, but you would just check the balance sheet and see if there are any fixed assets on the account, like, computers, desks, furniture, machinery, copiers, anything like that for your business. And depending on what type of business you have, if this is a landscaping business, so it might be lawnmowers, it might be, something that pertains to that business. I don't see any fixed assets here. Well, I do see one for a truck, but that's 2026. So let's go to last year to see if there's anything on the balance sheet for last year to show us an indication of what we need to do. And there's no fixed assets on the balance sheet for 2025, which means that we don't have to do anything. Had we had fixed assets for the balance sheet for 2025, we would need to get a depreciation schedule for those assets in order to record the depreciation within QuickBooks and have QuickBooks reflect the actual true balance of that asset as of December 31st, 2025. I know it's a lot, but if you get into the habit of checking these things regularly, like month end, you have month end close, right now everyone's getting ready for tax time and under the gun with deadlines and stuff, it gets a little easy every month and every year that you do these things. If you want me to take a quick look at your books before you file, put yes in the comments, or you can just give us a contact, or you can just click the link below in the comments. Also hit the like and subscribe button on this video if it helped you, and I'll see you in the next one. Thanks for watching. Be blessed.